Hello everyone, how's it going? In this video, we will talk about Mullen, trading under the ticker symbol MULN. Mullen has been a very interesting company to trade recently, with high volatilities and also many projects that may fuel future speculations. At the same time, it's a company that the market tends to not trust too much with the capital, especially when it comes to long-term investment. So, in today's video, we will go through the latest fundamentals, the price actions, and my analysis, as well as recommendation to hopefully see what is the best course of action to carry out regarding Mullen. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description, as every help is greatly appreciated. On Monday's trading session, Mullen's price went up by 2%. Which, in comparison to what happened in previous weeks, is an absolute miracle. Of course, significant sell-off pressure obviously remains, but Mullen has been able to hold off the additional bears who want to rush in and to give itself some time to breathe and to come up with other potential methods to boost the market's trust and faith in the company. I mean, that's going to be a heck of a work. But of course, nothing's impossible. Now, one of the potential reasons for why Mullen was able to hold on to its sell-off, or the ongoing sell-off, might be the fact that it recently completed their Series D obligations, which means that they may have enough cash to fulfill their short-term obligations, appeasing and calming down some of the market's worries before something else has to be cobbled together once again. Because, let's be honest, we know that it's only going to be a matter of time before Mullen has to come up with something else in order to justify its relevance. So let's also take a look at its technicals. The trading volume of Mullen has been 206 million shares versus the average volume of 146 million shares. Over the past 52 weeks period, the price fluctuated between 16 cents and $38. The volume of shares tells us how many shares are being bought and sold at any given point in time. And it can also tell us whether we have enough liquidity for a specific trading strategy. If the float is very thin, it means that the stock might be able to be pushed around. However, it can also mean that it's going to be it can be very hard to get out of a position. So when we compare the current volume against the average volume, what I see for Mullen is that there is some sort of momentum that is gaining up. Probably because people saw that, they were able to pay back a certain amount of obligations. Well, does this mean that there's more money than we think? Does it mean that Mullen has what's needed to weather the storm? That's going to be the sort of narrative the company wants us to believe in, and some of us definitely do, for better or worse. So I think that because the volume is, about 50 million higher than the typical average volume, there could be a momentum building from the perspective of the trading volume. As we compare to the current price to the historical price, Mullen is 12% higher than the 1-month low, 12% higher than the 3-month low, and 12% higher than the 52-week low. On the options market, it seems like the implied volatility is currently around 461%. Versus a historical volatility of just 190%. In other words, the market kind of anticipates that the volatility will be almost double the historical one. So the put-call volume ratio is currently around 0.21. In other words, many people believe that Mullen will go up, and it's very unlikely that it's going to keep going down. This is a fair position to hold, and also remember that This is also a logical one. I mean, at some point, when the stock is like trading in pennies, how much lower can it get, right? Obviously, many people think that it can continue to get lower still, but others don't. And this can be shown in the options contract. Regarding the shareholder structure, well, I don't think that any institutional shareholders wants to hold Mullen for the long term, just for holding sake or for investment sake. They're probably here as brokers or stuff like this in order to allow others to short it. Typically, it's always good to see some institutional participation, but in the case of Mullen, we have to be honest with ourselves. This is a stock that we picked up because we think that it has potentials in terms of volatility. It's not one of those stocks that has personally, I don't think that this is one of those stocks that I can hold for 10 years and it's going to become like the next Tesla. I highly doubt it. However, it may have interesting volatility plays here and there. It's just that now it seems like the volatility went the other way around, and many people, myself included, are holding the bag. That's just the way it is, I suppose. Mullen is a publicly traded company operating in the EV sector, and it is listed on the Nasdaq Stock Exchange. The company designs, manufactures, and sells a range of electric vehicles, including car, buses, and trucks. One of the key factors setting Mullen apart from the EV sector is the focus on developing long-range electric vehicles. M115 is a long-range electric truck that the company is trying to develop and eventually to manufacture. It has a significantly longer range than most other vehicles currently on the market, making it an attraction option for people who would like to invest eventually in this massive potential success. Another thing is that they are investing in developing heavy-duty electric vehicles, such as buses and trucks, designed to handle heavy loads and perform demanding work. This is a unique offering in the EV market, where most other companies are focused on developing cars and light-duty vehicles. In terms of financial performance, however, the company has been having a hard time generating income and consequently digging itself a large financial hole that they have to fill every time with further dilution. In terms of the long-term price action trends, despite the recent upward momentums such as IGO distributions, the company has been having a mostly bearish trend over the past 5 years, first trading between $5 to $10, peaking at $15, before finally falling back to below $1. What this suggests is that Mullen has been hard hit by not only the market downfall, but also its own fundamental weaknesses. This assessment recently begun to change, but I would say that it hasn't reached a convincing turning point, and that to a point, it still explains why Mullen is a stock I would recommend to trade instead of investing in. Regardless of the recent distribution contract or the short squeeze potentials, the short interest surrounding Mullen remains real, and that the interest surrounding Mullen, period, remains the expectation to scalp a quick gain. With that being said, I also want to add that things can always change within this sector. So if today I say that Mullen shouldn't be a stock that you invest in, maybe 6 months from now things could be different. The online communities have been initially skeptical towards Mullen. Nowadays, it's mostly something that follows the trend. So for example, if things are looking good, they will find the positive aspects of Mullen and to say that, you know what, this is why it's been going well. Or if things are plummeting, they're going to say, well, you know what, like such and such reason is the reason why they're doing poorly. And you will also have a small group of fans who will always find reasons for optimism, regardless of how desperate sometimes the situation may be. As far as their online footprint is concerned overall, the biggest factor to consider is whether the price action gives people enough motivation to have a position in Mullen. The other factors have sometimes served as a pretext to buy its shares, but more often than not, the price action has already sent that price signal to the market to react positively. On top of that, the macroeconomic trends affecting the sector have also been putting pressure on the stock price, including the increase of interest rates, the capital flight from growth stocks to other sectors, the conflicts around the world, the supply chain issues, and the expectation of a demand that will be softer than usual. And this is going to continue over the next couple of years due to a recession. Another factor to look at is how the flagship company in the sector, so in this case Tesla, has been doing. The EV sector being a relatively new industry, a lot of it is still in development, including the investor's mentality. People often determine whether they want to buy EV stocks based on how Tesla has been doing recently. The idea here is to profit from a sector-wide gravy train conducted by Tesla, pulling all the other ones behind it. We have seen on multiple occasions how the share price of a company like NIO, Lucid, XPeng, or Mullen follows similar trends compared to Tesla. Of course, Mullen doesn't always follow the trend, but it has played in its favor, but also the other way around. So we have to be mindful of those factors because they will definitely paint the picture of the surrounding environment in a specific direction. With that being said, let's also take a look at Mullen's financials, which might give us some hints about the decisions that the company has to take in the upcoming periods. One thing to note about its financials, it's not generating income for the moment, but we know for a fact that they are currently distributing iGos in Europe, so this will eventually change with the upcoming reports. The other issue is the cash reserve. So I personally believe that Mullen is a company that has to rely on continued capital injection by selling its equity to continue its going concern. This is concerning to say the least, but in my opinion, this is going to continue for the foreseeable future. In other words, the retail interest has to be significantly larger than the dilution that will be announced in order for us to make money. So like I said before, the fundamentals don't necessarily help Mullen. They are currently a dead weight that will eventually push the price down. But if we rely on qualitative factors, things that are beyond the immediate reality, but if we project the company to a brighter future, then it's possible that a large number of people might pile in and buy the stock up. This is the kind of behavior we're expecting to see if we decide to invest or to trade Mullen. Because in terms of trading, Mullen actually has a very good shareholder structure. So they have a mostly retail shareholder base. And what this means is that they will be far more volatile than typical stocks. Of course, I know that BlackRock recently increased their holdings, but this is not doing it for me. That alone doesn't mean much, personally. So, the lack of significant institutional participation means that I personally don't want to put money in for the long term. The key behavioral difference between institutional and retail shareholders is their investment horizon. Institutional buyers tend to stay for longer term, with years or decades as the measurement, whereas people who are in as retail, they tend to get in and out very quickly. Sometimes after a few days or weeks, they might already be gone. So the short squeeze seems to be the massive catalyst that we are dealing with at the moment, and this is something that can present excellent opportunities for us. So currently, there is a significant position, around 40 million shares, that are being shorted against Mullen. The majority of them are traded outside of public exchanges, so therefore by institutionals. The potential of the short squeeze in this case is significant. The short squeeze is a phenomenon that is observed when traders decide collectively to buy up the price of a stock, forcing those who are holding the shares to redeem them. The reason why they may have to do this is because they want to avoid further losses. So the redemption would act as a further wave of purchases, pushing the stock even higher. So it's important to note that regardless of how many stars are aligned on paper, The short squeeze itself may never happen, just because there are a number of factors outside of anyone's control that will determine if the short squeeze is something that will occur. So my recommendation is to stand on the side for Mullen and to see if there's any contrary movements building up over the next few days, or at least if we can hold on to the 17 cents level. Those kinds of movements are always possible, but it's also really difficult to pinpoint when they may happen. I mean, after all, we gotta keep in mind that Mullen is mostly a short-term trading position and not really an investment target. I would recommend to commit between 0.5 to 1% of your portfolio, and would also recommend to split the allocation in batches of 10 to 20% over a period of like 3 to 6 months, so that you can purchase more in retracements.